Hello, hope you are fine today. Today I want to quickly do the receivables control account. Receivables control account. Receivables control account. So earlier I had mentioned that when you sell goods on credit, your customers, you call them receivables. So today that's what we are dealing with. We are dealing with the receivables, our credit customers. Okay, so let me quickly put up the format for the receivables control account. Okay, so we are calling it the control account because this one it will consist all the transactions concerning our credit customers. We'll talk about the memoranda accounts where we put individual customer records. Okay, and the memoranda accounts, they are not part of the double entry. That's what you should note. So the double entry will be done in this book, the receivables control account and the sales. Okay, and the sales account. So I want to put up the format for the receivables control account so that we quickly do a question so that you understand this through a question. Okay. Okay, I'm trying by all means so that you see the formats. This is how the receivables control account will look like. So let me just explain every item on the receivables control account. So on the debit side, we have the balance brought forward. This is the balance brought forward from the previous period, previous accounting year. Yes, and then the credit sales, more sales that we make to our credit customers. You debit, and then the interest charged. This is the amount we charge if they delay to pay us on time. We charge them interest, so we're going to debit that amount. Dishonored check. Dishonored check. This is a check when they pay us, but the payment bounces back. So you're still going to debit that amount back. And then we have the refunds. This is a situation whereby maybe customers paid us more, so we have to refund them. So if they paid us more, meaning on our credit, we are going to have a credit balance. So when we clear that balance in terms of refunding them, this is the amount. And then on the credit, we'll have sales returns, of course, reducing the sales that we made. I explained the sales returns. These are goods returned back to us, maybe because they are faulty or somehow any other reasons. Then the cash or bank that they pay us through, the bank or the cash, we are going to credit. Discount allowed. This is the discount that we give to our customers. We're going to credit that. Bad debts. This means one of our clients, customers failed to pay us, and then we can't recover that money. That's what we call bad debts or irrecoverable debts. And then set-offs or contra. This is a situation whereby both the supplier and the customer, they do sell each other some things at some point. So find that you're a supplier, you've sold something to your customer, and the customer sold you something. This is what we call set-offs. So instead of you saying, pay me this much, you're going to set off the smaller amount from the bigger amount, and then you record that as a set-off. Then balance carried down. This is, of course, this is the balancing figure. So the balance brought forward will be on the debit side always. When you bring this side to the debit, to be the normal balance that we expect to have in the receivables control account, because the receivables control account starts from the debit. The normal balance should be on the debit. If it has a balance brought forward on the credit, it means something unusual might have happened, meaning that we are owing customers now, instead customers owing us. Okay. Okay, so at this point, allow me to quickly read the question that I have, the one that we'll be doing. Okay, so the question reads, Success Knowledge Center had the following transactions from the sales daybook as at 31 December 2023. Then the first transaction, which happened on December 3, invoiced A anode for the sale on credit of hardware goods amounting to 100 kwacha. The second transaction, which happened on December 11, invoiced B Bagshaw for the sale on credit of electrical goods amounting to 150 kwacha. Transaction number 3, which happened on December 15th, invoiced C Cloning for the sale on credit of hardware goods amounting to 50 kwacha. Transaction number 4, which happened on 10th December, received payment from A anode of 90 kwacha in settlement of the debt, having given a discount of 10 kwacha. Transaction number 5, which happened on December 18th, received payment of 72 kwacha from B Bagshaw in settlement of the debt, having given a discount of 8 kwacha. The next transaction received a payment of 120 kwacha from C Cloning. And then the question reads, write up the personal and control accounts from the given transactions which took place in December for Success Knowledge Center. Okay, hopefully you got my reading of the question. I can't write it up because of time. And the best you can do, as I'm reading the question, feel free to pause the video, jot down the question so that it will help you follow through as we work it out. As I do, as usual, I'll send you a PDF of the question of the notes about this video. So hopefully you follow and hopefully you understand. Okay, so let's quickly dive in to solve this question. So our sales day book will look like this. Okay, sales day book. This is a book of prime entry or original entry. It's not part of the double entry. It's just there to indicate the sales that we made. So of course we'll have our date and details and the amounts that was involved. Okay, so here we have the first transaction. We invoiced A anode, so our details will be A anode. How much did we invoice A anode? We invoiced A anode the amount of 100 kwacha, okay? Kwacha 100, and then the next one was B Bagshaw. B Bagshaw. B Bagshaw, how much? We invoiced this one 150 kwacha. And then C Cloning. C Cloning, we invoiced this one how much? That was 250 kwacha. Okay, this was our sales day book. Our sales day book for the sale of hardware. So we have hardware here. Okay, so we're going to have hardware there and electrical there, and then we put up the amounts just to specify more in our day book to say this amount was about hardware and the electrical. Then here we will need to have the total of the goods that we sold. So this will come to 250 plus 150, that's 3, 4, 500 kwacha. 500 kwacha, these are the sales we had in a month. Of course, in the dates, you indicate the dates when these transactions were happening. They are about December, both of these. So you indicate the dates here and then the amount there. And then for hardware, okay, so if we specify more, hardware, electrical, we have that. All these are part of the sales day book, but what's important is just for you to indicate the amounts that you sold and the details, who got what item, and then this part going this side is just like a specifying more to say under hardware these are the things which were gotten, and under electrical These were the things which were gotten. So we've dealt with the sales day book, just recording. Okay, we haven't come yet to the receivables control account. This is just the foundation that I'm laying. So these accounts, and we haven't even been asked to do this in the question, but we want to know, because the sales, the receivables control account consists of this same total amount. That's what will go in the receivables control account. Okay, so from this one, let's do now the memoranda accounts for individuals. Let's see how another account will appear, B Backshaw account and C cloning account. Remember, like I said, the memoranda accounts, they are not part of the double entry. Okay, so when you make these sales, the double entry will be between the receivables control account and the sales only. Only these two accounts will show the double entry. All these other things we are doing, they're not part of the double entry. So let's do the anode account, memorandum, receivables memorandum account. Anode. My board is kind of. Oh, sorry. Okay, anode account, anode. It's a memorandum account. Like I said, it will look like that. So first of all, we're going to debit. If at all we have any balances with anode, which anode hasn't paid yet, it will be on the debit, balance brought forward. But we don't have, so we look forward to what we sold anode. Okay, so we are saying we sold him so hardware goods, 100 kwacha. So we sold him hardware, 100 kwacha. Okay, 100 kwacha. That's what we sold anode. That's what we sold anode. And then let's look at what else, the transaction we had. The other transaction is anode paid us 90 kwacha. So we're going to say cash. Cash, he paid 90 kwacha. And then the discount allowed. Discount allowed was, of course, 10 kwacha. Let's balance up this so that it will balance from here. From the debit, we have 100, and here we have 100. So this account was closed. The payment was complete. There was a discount of 10, and they paid 90. We don't have a balance carried down. Balance carried down, we don't have. Okay? So this is the memoranda account for anode. That's how it's going to look. That's how it's going to look. Memoranda account is just there in the books for memory, for you to remember when you see the account. Say, oh, there's a balance draw to anode, because the receivables control account, it only show you the balance for the all receivables, for the totals. Okay, so you can't know it's for anode, it's for what. But for memoranda accounts, they are personal accounts where you can still go back and check and still say, okay, we still have pending issues with anode. Let's look at the sales account, who will look like that, who have the hardware, which came to 300 kwacha, and then we're gonna have the electrical, which is gonna come to 150. Of course, the sales account has we record from the credit entry, and then with the total here we are expecting is 500 kwacha. Okay, that's our sales account. That's our sales account. Now I want to do the discount allowed account. You should take note of the totals. They're the ones I'm concerned with. These are the ones we are transferring now to the receivables control account. Then we'll be done with the question. Okay, the discount allowed account will look like that. That's the amount on the debit, because discount allowed is an expense. So all expenses we debit. Okay, that's how it will look like. BNR, B Backshaw, you only record those guys who got the discount, and that's the total that we have. Okay, the receivables control account now. So the receivables account will have the total from the sales, 500 kwacha. okay, from the debit, and then it's gonna have the discount allowed amount. Allowed was 18 quarter, and then it's going to have the cash or bank that we received from our clients. So the 300 quarter in total of okay, we received 300 minus 18. That's the amount that we received. We received 282 in cash. Okay. So now it's a issue of balancing. So like I said, the receivables control account balances from the debit side. So the total we should have is a 500 kwacha. And then here as well, on the credit side, we should have a 500 kwacha. So let's add this. This is coming to 300 if you add this. So balance carried down is of course 200 kwacha to make this side 500 kwacha. Then this balance comes to the debit side. Balance brought forward. Balance brought forward 200 kwacha, showing that we still have a 200 kwacha pending to be cleared by our clients. They need to pay us this amount. That's why we have a debit balance in the receivables control account, and that's how you prepare the receivables control account. Hopefully this video will help. Please ignore the noise in the background. There's noise where I work from, so hopefully you understand, and feel free to ask the questions after the video. The full notes explaining this will follow after you go through the video, the clip. That's it I had for you. Thank you so much. Hopefully my explanation was understandably. Have a good day.